Adding this ETF to your portfolio could make you millions and give you exposure to artificial intelligence. Welcome back to another episode of the MD Investor, where we're going to dig into Invesco's QQQ, their growth ETF with exposure to artificial intelligence, robotics, everything technologically related. And stay to the end because I'm going to show you how investing just a small amount of money into this growth ETF can really power your portfolio. Let's jump into my computer. So here we are on Invesco website. This is basically an ETF to get exposure to artificial intelligence, everything computer, and growth. Like I've said, you need a portion of your portfolio to be dedicated to growth, to outperform the market, to outperform the S&P 500. It's fine to have a portion that's dedicated to the S&P 500 or the total stock market, but you want a portion to beat the market. So let's look into the fun details. Invesco QQQ ETF tracks the NASDAQ 100 index, giving you access to the performance of the 100 largest non-financial companies listed on the NASDAQ. The fund and the index are rebalanced quarterly or every 3 months, and it's reconstituted annually. The ticker symbol is QQQ, which is very easy to remember. It's traded on the NASDAQ. The inception date is March 10th, 1999. So it's about 25 years old. There's 101 holdings. The expense ratio is 0.2%, which means you will pay $20 for every $10,000 that you have invested. If you remember, the VGT or the Vanguard Information Technology ETF, its expense ratio was half or 0.1% or $10 for every $10,000 you have invested. Number of shares that are outstanding is about 584. It's about $252 billion in assets under management. So quite a lot of money in QQQ. It's about $431 per share. QQQ delivers exposure to companies that are at the forefront of transformative long-term themes such as augmented reality, that's like artificial intelligence, cloud computing, big data, mobile payments, streaming services, electric vehicles, and more. So a lot of technologically related companies. Number one, Number one holding is Microsoft, representing about 8.6%. Apple, Nvidia, Amazon, Broadcom, which is the computer chip company, Meta Platforms or Facebook, Alphabet, Costco Wholesale. So this is a little different than VGT, which is all technology. So they do have some consumer staples here, right? Costco Wholesale and Tesla. Let's look at the sector allocations. So the one thing you'll notice is that this is mainly technology. 58.9% is technology related. That's the blue here. Consumer discretionary is the next one, which is 17.9%. And consumer discretionary, as you already know, is a sector involved in things that are not really mandatory. So if you have extra money, you can use them. So hotels, restaurants, maybe cars, stuff that's not really necessary. Healthcare 6%, industrial 4.6%, telecom 4.4%, consumer staples, that's stuff you require. So that would be food, clothes, and so on. Basic materials 1.94%, utilities 1.2%, energy, and real estate less than 1%. Now the sector here it'll show you the specific companies, right? So technology. These are the companies in the technology sector, right? We already went over the top 10. But there's other things here: Adobe, Advanced Micro Devices. That's a semiconductor company, right? Building those computer chips that's needed. Intel, Intuit, Qualcomm. All these are technology companies. Some of them are outside of the top 10, but these are all the companies that are in the technology space. Consumer discretionary would be these companies that are involved in things that not really mandatory, but if we have extra money, we can spend on them: clothing, entertainment, automobiles, hotels, restaurants, and more. So Amazon, Tesla, Costco. Even though Costco makes food and stuff, so Netflix, Starbucks, and so on. Healthcare, the companies involved in the healthcare. Amgen is a biotech company. Intuitive Surgical. Okay, so these are Moderna, right? That was big during the pandemic. Industrials, Honeywell, PayPal, Cintas. Okay, so these are all the companies that are involved. Invesco QQQ, the ETF that tracks the Nasdaq 100 index, has beaten the S&P 500 9 out of the last 10 years. That's why you want to consider this. It has beaten it nine out of the past 10 years, which is great. So if we invested $10,000 in the S&P 500, it would be worth $33,826 today, or more than 3 times. The Invesco QQQ, which is the blue line, it tracks the Nasdaq 100, so they're going to be very similar. The Invesco QQQ, your $10,000 would be worth today $55,040, more than 5.5 times. That's growth. Your 10,000 is now more than 5 times 10 years later. So if you would have invested maybe 100,000, that now would have been worth 550,000. That's growth, right? So it had beaten the S&P 500 9 out of the last 10 times. The Nasdaq 100 index is a little higher at about 56,000, and the difference is probably the expense ratio that was taken out to pay for the Invesco QQQ. So this shows that the Nasdaq 100 has generated faster 10-year compound annual growth rates than the major industry benchmark. So the S&P 500 biggest companies, over the last 10 years, the compounded growth rate has been 5.33%, while the Nasdaq 100 compound growth rate has been 11.02%, so faster growth. So now let's look at the returns. The S&P 500 is in the pink. The Invesco QQQ is in the blue. That's the market price, and the Invesco QQQ net asset value, which is the value calculated, I think, at the end of the trading day. That's in the light blue. They're going to track very close together. The net asset value and the market price is going to track very close together. Since inception, you see the Invesco had beaten the S&P 500 last 25 years. Year to date, the S&P 500 is beaten the Invesco QQQ from year to date, right? So since January 1 of 2024 to currently. Over the last 1 year, the QQQ is beating it. Over the 3 year, it's also beating it. 5 years and over the 10 years, it's beating it. This is down here in a chart form. So the S&P 500 is at the bottom, and our Invesco QQQ, we can look at the top line. The year-to-date return of the S&P 500 has been about 10.5%. For the QQQ, it's been about 8.55%. So it's trailing the S&P 500 year-to-date. The 1 year return for the S&P 500 has been about 29.8%. But the 1 year return for the QQQ has been about 39%. So about 10 points higher. The 3 year return for the S&P 500 has been about 11.49%. And for the QQQ, it's been about 12.38%, so about a percentage point higher. The 5 year return for the S&P 500 has been about 15%, but for the QQQ, it's been about 20.6%, beating it by over 5 percentage points, which could be very important. The 10 year return of the S&P 500 has been about 12.96%, almost 13%, but the 10-year return for QQQ has been about 18.59%. So we'll use that 18.59% in our compound calculator and see how that would project going forward. So if we had put $100 into QQQ every month over the last 10 years, our total value right now would be about $34,000. Right? Not bad for $100 a month. If we had put in $200 every month into QQQ over the last 10 years with a return of 18.59%, our total value would be about $68,000. What if we had put $300 per month into QQQ over the last 10 years with a growth rate of 18.59%, our value would be about $103,000. What if we were able to put $500 per month into QQQ over the last 10 years? Our portfolio value would be worth now $171,000. And if we were able to put $1,000 per month into QQQ at 18.59%, our portfolio value now would be worth $343,000 just in one decade of $1,000 per month. So if QQQ can continue this growth, right, this would be very nice at 18.59%. We will see. Again, guys, the MD Investor with another video showing how we can get some growth to our portfolio and get exposure to AI. Again, keep the suggestions for video topics coming, and I will see you on the next one. MD Investor out.